Hello everyone and welcome back to the channel. Today I will analyze Meta stock. Meta is a special stock for me. It was my worst performing stock by far in the first year of my investment in this new portfolio that I started from my YouTube channel, but 3 years later it is turning into my best performing stock. Half of the world population interact with one of their applications or platforms on a regular basis. I bet you are one of the people that at least check one of these platforms weekly, or at least know someone who is a regular user of these platforms. Instagram, WhatsApp, Facebook, or Threads. Or maybe you are a user of one of these futuristic technologies like Oculus VR headsets, Ray-Ban smart glasses, or maybe you are an AI developer and interact with Llama large language model. The moat of this company is undeniable, even if you don't like social media or these technologies. They also have a CEO that I think is really underrated, Mark Zuckerberg. Regardless of one's feelings about him, it's undeniable that Mark Zuckerberg has proven to be an exceptional and highly effective CEO, especially over the past couple of years. After a challenging period that included a stock price obliteration, he has orchestrated a phenomenal turnaround for the stock. This isn't just about cutting costs. It was a strategic masterclass in refocusing on core strength of the business while making a massive forward-looking bet on the next big thing. You may not agree with me, but I think he's a brilliant capital allocator. He has a history of successful and highly profitable acquisitions like Instagram and WhatsApp years ago, and now he has started this massive, well-timed investments in AI infrastructure. Yes, maybe he's too aggressive with his strategies, but you can't really bet against Zuckerberg. While many of his peers are now chasing the AI trend, he was laying the groundwork of their AI expansion by acquiring tens of thousands of GPUs and recruiting the top AI talent. This has positioned Meta as a leader in generative AI, which is now basically supercharging their core ad business and creating new revenue opportunities for the company. Now, with so much of the Meta future tied to these massive AI investments and expansion of their family of apps and metaverse, the question remains, is Meta a good investment right now? Or is the hype running too hot? Stick around as I break down the financials, the future, and what analysts are saying, and I will give you my fair value estimate for Meta stock at the end of the video based on discounted future earnings model. Let's look at my history with Meta stock first. Meta is one of my largest positions in our stocks portfolio with an incredible plus 390% return. Almost 400% return at this point. I initially bought Meta when the stock was trading close to $310. The stock price was absolutely obliterated afterwards when Mark Zuckerberg started to shift the focus of the company to metaverse project. And the stock initially fell to $250. I released a video when the stock had the initial crash and mentioned that I believe Meta fair value is close to $357. And I started to buy more shares of Meta. After the video, the stock crashed again, this time to $180, and again to $120, and again to something like $90. I didn't have much capital to play with at the time, but I continued to buy Meta shares and doubled down on the position as it went lower and lower. This was the time that everybody was saying Meta is a dying business. Nobody is using Facebook anymore, TikTok is eating Instagram alive, and Zuckerberg just lost it by investing in metaverse, and he's the worst CEO ever. I looked at the numbers, financial statements, and I couldn't see a dying business. Their profits were down a little, their revenue growth was slowed down slightly, but still half of the world population was on one of their apps daily, and the reason for lower profits were their massive investment in their new ventures. And I believed in Mark Zuckerberg as a great capital allocator and a great CEO. In the short term, the stock price is always moved based on sentiment, but in the long run, it is based on the fundamentals of a business. In other words, the stocks are voting machines in the short run, but they are weighting machines in the long run. I tried to look at fundamentals of Meta instead of sentiment, And here are the results. The stock rebounded from $90 to $754 US. I sold half of our shares in Meta when it was around $350 in the main portfolio and held the rest of the shares in our smaller portfolio until today. The stock had a shockingly strong fundamental growth in the last couple of years as well. For example, we can go to the revenue history in the last 10 years and we can see this beautiful chart. It has a CAGR growth rate of 27.9%. Even if we look at quarterly growth, it is still growing dramatically. For a business with a lot of capital expenditure, I usually like to look at operating cash flow. And in case of Meta, this chart is absolutely beautiful. 30% CAGR growth in the last 10 years, and even quarter over quarter, the chart still looks like a perfect chart. They are growing their operating cash flow really fast. While they have a relatively large share-based compensation, they still bought back a lot of shares in the last couple of years, and shares outstanding has been going down slowly over time as well. So fundamentally, the stock is really strong. And this is happening when the company is virtually debt-free. Just last quarter, Meta again absolutely crushed Wall Street expectations with earnings report. The company reported $47 billion in revenue, which was a 22% increase year over year, and it was well above the expected $44 billion in revenue. So this was telling the market that the digital ad business and family of apps, Instagram, WhatsApp, Threads, and Facebook are still incredibly strong and sticky. Profits were even more impressive. There was an EPS of $7.40 per share, which was again significantly higher than $5.88 that analysts had forecasted. The company continues to show robust user engagement across its family of apps, with daily active users remaining high and driving that strong advertising demand. And finally, Meta has proven it can be profitable even while investing heavily into expanding their AI infrastructure. Meta is pouring billions into AI infrastructure and research, including its new supercluster and the continued effort of development of Llama models. The company believes AI will supercharge its existing ad business, and it creates more revenue stream for the company. While Metaverse is still a long shot play, Meta is making bold moves in this area as well. They are developing new consumer-ready smart glasses and virtual reality headsets and have entered into new key partnerships. This is a massive multi-billion-dollar bet on the future of social connection, and I'm willing to bet on Zuckerberg to make a good return on their invested capital in all of these new ventures. Of course, no investment is without risk. For Meta, the big concern is their spending and also the regulatory problems. Their massive spending on AI and Metaverse is a double-edged sword. While it could lead to future growth, it can also pose a risk if these investments don't pay off as expected. They still face significant competition from rivals like TikTok in social media and other AI companies like OpenAI, Google, Perplexity, and Amazon in AI battlefront. Another risk is antitrust cases. The company is constantly under pressure from regulators across the world. Just recently, European countries fined them for violating the Digital Markets Act, and they are still facing antitrust trials that could potentially force them to even spin off Instagram or WhatsApp. But that is highly unlikely, and I'm not really concerned about this, as Meta had to deal with these antitrust cases in their whole history. Before moving into my discounted future earnings model, let's look at historical valuations of Meta stock. Let's first look at their historical price to earnings ratio. As you can see here, the average PE ratio for Meta in the last 10 years were 33, and in the last 5 years it was close to 24.8. The current price to earnings of Meta is around 27. Which means it's a little bit higher than their recent history average, but overall it is not really high. As I mentioned before, I actually think looking at price to operating cash flow is probably better than price to earnings for Meta due to their huge investment in AI infrastructure at the moment. With Yara IQ, you can actually select historical chart for price to operating cash flow as well. So historical average price to operating cash flow for Meta in the last 10 years was 19.2, and it is currently close to 20 for Meta. As you can see, Meta is basically trades at their historical average for price to operating cash flow. As you can see in 2022 dip, when Meta was trading close to $90, price to operating cash flow was at a historical low of 4.4. And that was exactly the best time to buy Meta in the recent history. Anyway, even today the stock is not really expensive based on price to operating cash flow metric, as you can see here. With all this information in mind, now let me go over the valuation of Meta stock using my own model. To start building the model, I imported a series of general parameters from Meta stock in Yara IQ stock analyzer, like the current share price, their revenue, their number of shares, their net debt, which is their short-term and long-term liabilities minus their cash or cash equivalents, and their earnings per share. I also put my expected rate of return to be 12% for this stock to give myself a little bit margin of safety. Now, in this model, I will calculate the fair value of the stock by projecting their future earnings and then discount the terminal value and future cash flows minus the liabilities of the company back into the present value of the stock based on 3 different scenarios. In the bear case, or the most negative case for the stock, the business will have a little bit margin compression. I considered 1.5% annual share-based compensation, which is higher than usual for Meta, and I assumed the revenue will grow by 7% in the short term, 5% in the midterm, and eventually by only 3% in the long term. And I considered a terminal multiple of 15, which is in agreement with historical bear periods for Meta. For base case or normal case, I considered a little bit better margins in line with the current earnings margin of the business, 1% share-based compensation, a normal revenue growth in line with analyst expectations, and a terminal multiple of 20, which is still a conservative PE multiple for a high-quality tech company like Meta. Finally, in the bull case or best possible outcome, I considered a little bit of margin expansion, only 0.5% share-based compensation, and 18% short-term, 14% midterm, and 10% long-term growth, and a terminal multiple of 25, which is a bull multiple for this stock. Now, if I hit calculate, the software will give me some valuable information about this stock based on my assumptions. It gives you the intrinsic value of the stock in each scenario, which ranges from $418 in the bear case to $1,246 in the bull case, and then it will provide you with a fair value estimate, which is $785 per share for Meta, and comparing to the current share price of $754, Meta is trades at almost 4% discount today. It is a buy according to the model, even now close to its all-time high share price. I personally own 30 shares of Meta, and it is my second largest position, so I'm not actively looking to add to Meta, but if we see any meaningful dip in the share price, I will definitely add to my Meta position, as I still believe Meta is fundamentally strong, it has an amazing CEO at the helm, and it is trading at a reasonable valuation. That's it for today. Hope you enjoyed this analysis, and I see you guys in the next video. Farewell.